Hey guys, welcome back. In today's video, we are talking about the breakout season for AMC, how shorts are desperate for shares, the highest short volume we've seen in months, and many more in this video. First, we take a look at this. Weekend box office came in just under 68 million, bringing the quarter to 627 million. Get ready for big weekends the rest of Q4. Now, this is the list of all the movies that are coming out. Now, firstly, this indicates that we are getting ready for an extremely good Q4, where we're going to be seeing the box office do really well. What I also use this as is an indication of going into next year, 2025, and understanding how we're going to see the box office get even bigger. And so firstly, we can talk about here, like we can see here, something that we've understood with the latest earnings of AMC is that AMC is able to operate and make profit at the same level of box office, meaning that even if the box office was the same as last quarter, we'll still be able to make more money right now because of our management. And so this is why when we understand that we're not only going to get the same box office, but an even bigger one at the rate of how the movies are being released, produced, etc., then obviously we are ready for an extremely good quarter and kind of just the future with AMC. And we're seeing this actually reflecting by how institutions and shorts are reacting. So firstly, what we can see here is Wedbush, the fake AMC analyst, with 0.0001 per share stink bids, where we can see it coming in here. Now, we've seen this plenty of times in the past before, and we will still be continuously seeing this. The reason for this is because this is obviously one of the most optimal ways for the shorts to try and suppress the price of AMC. It has been something that they have been doing for consecutively. Crystal Ball is someone who has been actively, obviously, keeping track of this, and we've seen how impactful and how damaging spoofing can be. And that's why we are, and why I said, we are going to be continuously seeing this. But at the end of the day, like we talked about, the reason why they spoof AMC is because they want to lower the price for multiple reasons. The first reason, if AMC's price were to be extremely low, AMC wouldn't try and sell their shares for money to raise money. So it limits our ability to raise money. And they understand that's deadly because by raising money, we're obviously able to pay off debt, we're able to invest more money, and that's what we talked about in the past before. The second reason is obviously when you push the price low, you are trying to expect people to sell their shares off AMC, meaning that the real shares get offloaded into the market and can be bought up by institutions. It's also to try and stray people away that are new who wants to invest into AMC but don't because they see that the price is falling down. And there's a big reason, and if you take a comparison, let's take a look here. CNK is up 117% in the last year and AMC is down 46%. Same business and roughly same debt. The difference is that one is held by retail investors and the other by institutions and market makers that manipulate the stock market. And this is obviously the two comparisons between AMC and Cinemark. And you can see Cinemark up 117, AMC down 46.69. Now, from the start with this, so the box office isn't a direct reflection of what AMC is doing. AMC being the biggest company in this industry will obviously benefit the most, but the box office doesn't directly relate and reflect what AMC is. But by understanding that the box office is recovering, by understanding that we're seeing, the whole industry improving, we are supposed to be seeing the stock price goes up. Hence why the 117% in Cinemark is what I would consider normal because the box office is recovering, because the movie theater, because the industry is a good investment. But this is where it comes into play, and it's really understanding why this is the manipulation, why we are in a corrupt market. And that's understanding, like we talked about, AMC being the biggest company in this industry, AMC being the one that has the most investors, AMC being the one that's being talked about the most, having the most kind of spotlight in the media. Why is it that AMC is not up 117%? Like I said, I do believe a 100% increase is normal, maybe give or take 10 to 20%. But when you understand that the other company is not, and then you understand the difference is that one's held by retail and one's held by institutions, then it starts to make sense. And this is why we talked about how institutions are trying to prepare for the movie industry for the uprise of AMC, because firstly, they're trying to invest, and that's what we talked about. Institutional ownership is increasing in AMC. What we're also seeing, like we stated at the start of the video, is that the box office is improving, is recovering, is growing even bigger. And so that's what they are trying to do. And now another way to reflect this, you can see with these news articles, and this is something that we've covered in the past. So they're talking about a company called Armcore, ticker symbol AMCR in NYSE. Now the ASX is the Australian exchange, which has the same ticker symbol as, of course, AMC Entertainment. You guys can see here, ASX, AMC. Now, firstly, in Benzinga, now this is a company that has obviously said a lot of negative things about AMC. You can see they put the ASX symbol first, and of course it's down 0.7%. Now, of course, for NYSE is up 0.10%. Now, there's multiple reasons for why they do this. Like we talked about, one of the first things is obviously for the algorithm manipulations, where algorithms detect what symbol it is, and they try and obviously push it down. But the thing is about this is that this is obviously good news, but they still put AMC first instead of AMCR, which is NYSE, when I presumably assume that the target audience is people who are trading in the NYSE market, but also is understanding the fact that it's because it's down 0.7% is something that could have brought negativity towards AMC, because we have seen this actually in the past before, where other companies, even though they don't have the same ticker symbol as AMC, but because they have somewhat AMC in their name or parts of their name, they include the ticker symbol AMC. And so this is just another way. Now, this is actually good news, but I think the only reason why they put it, well, firstly, yes, it is because it's, of course, in the Australian exchange. But I do believe that, again, there is something of a relationship between AMC and AMC Entertainment. Now, someone is desperate for them shares today. And what we are seeing is, again, the increase of shares for AMC. You can see it went all the way up to 2.7. At one point, it did drop down to 600,000. So there's a big reason for this. Now, like we've talked about with everything, and if you haven't understood yet, AMC is going to improve fundamentally. AMC is being spoofed. AMC is going to get picked up by institutions. These are all things that are showing the positives of AMC. But what we're also seeing right now is another stock that will affect AMC, and like we talked about, is vice versa as well, which is obviously GME. Firstly, what we have is the volume coming into the German market. So remember the last time that this has happened. So GME is obviously experiencing volume wherever it's in the European market or wherever it's in the US market. And you can see how the shorts are panicking, as we're seeing towards the night before Squeezemas, the highest short volume in months on Friday, where we obviously ended last week's Friday. And we talked about how it's obviously being suppressed. And this is what we're seeing. Now, GME is actually up to date along with AMC. It's not to the point where they're breaking out and they're squeezing margins, but they are, of course, on the verge of breaking out. And we're seeing this volume coming in. And another way of understanding this, you guys can see here, they just borrowed 1.5 million GME shares for a combined 38.7 million plus interest. What's about to blow? You can see the 2.2 million going down to 650,000, just like how we saw here with 2.8 million going down to 600,000. They are obviously borrowing shares of both AMC and GME. Now, like I said, they work in the same way. If GME were to go up, then AMC would go up. If AMC were to go up, then GME would go up. And so when they see one stock going up, they have to do their best to suppress both of the stocks. In this case, we're seeing the volume coming in for GME right now, but you can see how the short volume remains the same for AMC and GME. Now, firstly, what does this tell you? Well, shorts are desperate for shares, and they still and will always be desperate for shares, because no one in the retail is obviously selling the AMC shares nor the GME shares. The second thing, as we're seeing the higher volume coming in right now, we should be and will be expecting the volatility of the price when they go up because of natural buying, because of FOMO, other factors, etc. But we will also be seeing the sharp decline because of the suppression, as we're seeing the high end rise of the volume. And so that's something to be expecting, but that's something that allows us to understand, where we are, how we're pressuring these short sellers, and what we should be expecting. Now, another thing, and I think it's quite useful to kind of talk about, is understanding that Bitcoin has reached a new all-time high of $88,000. So this is obviously crazy news, because this is, again, Bitcoin making a new high. Now, the relationship to this is obviously because of Trump being in the office, and that has a very positive effect, and now it's brought in a lot more volume. But it's also understanding how we've talked about in the past, how institutions, and again, none of this is ever financial advice, so do take out a grain of salt, make sure you do your own due diligence and research. And now, this is not me talking about, you shouldn't be buying crypto. This isn't me about you saying you should be staying away from crypto, but it's understanding that institutions have also used crypto as collateral. Now, there was a rule where it's being implemented that crypto can't, but we've seen how the use of tokens and other cases have obviously allowed them to get more collaterals or more power to short AMC. So as we see Bitcoin go to 88,000, this is something that we should also be expecting in terms of the manipulation of AMC and GME potentially increasing. But again, this is just something that we should be obviously taking into consideration. And you guys, thanks for watching. I'll catch you guys next time.